If you've been living the dream with two passports in your drawer, thinking you've got the best of both worlds, I need you to lean in for a second because the ground just shifted. We are entering 2026, and for the millions of Americans who hold dual citizenship, the wait-and-see period is officially over. Between a massive new bill hitting the Senate floor that could literally force you to choose one nationality or lose your U.S. status, and a wave of new digital reporting rules from Europe to the UK, the set it and forget it era of dual nationality is dead. I'm seeing so many people in my comments asking if they're going to be tracked or if they need to start looking for a renunciation lawyer. And honestly, the anxiety is justified. But don't panic. Today, we're breaking down exactly what's happening, why your second passport might actually be a liability right now if you aren't careful, and the specific reporting deadlines you cannot afford to miss this year. Before we dive into the bomb that was just dropped in DC, do me a quick favor. If you want to stay ahead of these global travel and citizenship shifts, hit that subscribe button and ring the bell. Things are moving fast this year, and I'm going to be your eyes and ears on the ground for every policy change that affects your mobility. Also, drop a comment below and let me know. If you were forced to choose just one passport tomorrow, which one would you keep? I'm curious to see where the loyalty lies in 2026. Now, let's get into the headline that's been keeping expats and dual nationals awake at night. Just a few weeks ago, the Exclusive Citizenship Act of 2025 was introduced, and it is a total game changer. For decades, the US has kind of had this don't ask, don't tell vibe with dual citizenship. They didn't officially encourage it, but they didn't stop you from doing it either. This new legislation wants to end that gray area for good. The bill proposes that every US citizen must hold sole and exclusive allegiance to the United States. If this passes, current dual citizens would have exactly 1 year to pick a side. You'd either have to formally renounce your foreign citizenship, or if you don't, the government would treat that as you voluntarily giving up your American citizenship. It sounds like something out of a movie, but it's sitting on the desk of the Senate right now, and it's fueling a massive conversation about what it actually means to be a patriot in a globalized world. Even if that bill faces a long climb to become law, the mere fact that it's being debated tells you which way the wind is blowing. Governments are getting much more aggressive about tracking who belongs where. We're seeing the creation of new federal registries designed to map out exactly who holds which passports. In the past, you could just travel on your US passport and keep your other life a secret. In 2026, that's becoming impossible. Digital systems are finally talking to each other. When you scan your passport at an e-gate today, the back-end systems are cross-referencing biometric data in ways they simply couldn't 5 years ago. This means the days of hiding a second nationality from the IRS or the State Department are effectively over. Speaking of the IRS, let's talk about the reporting alert part of the title. If you're a dual citizen living in the States or an American living abroad with a second passport, 2026 is the year the reporting net tightens. You've probably heard of FBAR and FATCA, the alphabet soup of tax compliance. But this year, the penalties for forgetting to report that foreign bank account have hit record highs. We're talking about fines that can easily exceed the actual balance of the account you forgot to mention. The IRS has ramped up its data sharing agreements with foreign banks, meaning they often know about your local account in London or Tokyo before you even sit down to do your taxes. If you're a dual national, the US views you as a US person first, second, and third. They don't care if you haven't lived in the States for 20 years. If you have that blue passport, they want to see your worldwide income and your foreign assets reported every single year. This brings us to a really uncomfortable reality. The cost of holding a second passport is going up, not just in terms of fees, but in terms of administrative headaches. I've seen so many people recently who are actually considering giving up their US citizenship because the reporting burden has become a full-time job. But before you even think about that, you have to understand the exit tax and the covered expatriate rules, which we'll get into later. For now, the most important thing you need to do is an internal audit of your documents. Is your foreign passport expired? Does your US passport have at least 6 months of validity? Because as we're about to see, the rules for how you use those passports to cross borders have just been completely rewritten for 2026. Think about it this way. For the last 10 years, having a second passport was like having a get-out-of-jail-free card for travel. You'd use the US one when it was convenient and the other one to skip a long line or avoid a visa fee. Well, the world's border agencies have finally caught on, and they are putting an end to the passport shuffle. If you're a dual citizen of the US and a European country, for example, the way you enter the Schengen area is about to change in a way that could get you flagged or even denied boarding if you don't have the right digital authorization linked to the right passport. The reason this passport shuffle is becoming a dangerous game is that the digital infrastructure at borders has finally caught up to the policy. For years, if you were a dual citizen of the US and, say, Italy, you could fly into Rome on your American passport, show your Italian ID to the border officer, and they'd wave you through. But starting in late 2026, the European Union is officially launching ETIAS, the European Travel Information and Authorization System. This isn't just another form, it's a digital gatekeeper. If you try to enter the Schengen area on your US passport without an ETIAS authorization, the airline won't even let you board the plane. But here's the kicker for dual citizens. You actually cannot apply for an ETIAS if you are a citizen of an EU country. The system will see your dual status and block the application because as an EU citizen, you have an inherent right to enter. This creates a massive catch-22 if your secondary passport is expired, or if you simply prefer using your US one. In 2026, if you hold EU citizenship but show up at the gate with only a US passport and no ETS, you're stuck. The airline system will demand an ETS for that US passport, but you won't have one because you're technically exempt as an EU national. To avoid this, the new rule is absolute. If you are a dual citizen of the US and an EU country, you must travel to Europe using your EU passport. There is no longer a choice if you want a smooth boarding process. The same logic applies to the UK, which is strictly enforcing its new ETA, Electronic Travel Authorization, as of February 25, 2026. If you're a dual British-American citizen, you can no longer just breeze into Heathrow on your blue US book. You are now expected to present a valid British passport or a certificate of entitlement. If you don't, you're going to be treated like a tourist, and that 90-day clock starts ticking the second you land. Before we move into the actual reporting deadlines that are hitting this spring, if you're finding these travel hacks life-saving, do me a favor and hit that like button. It tells the algorithm that this kind of detailed, fact-heavy content is what people actually need, and it helps me keep the lights on so I can keep digging through these dry government manuals for you. And if you haven't already, share this with your travel group. Trust me, someone in there is planning a trip to Europe this summer and has no idea their dual status might actually complicate their entry. Now let's talk about the reporting side of the 2026 alert. While the travel rules are about where you go, the reporting rules are about what you own. We are currently in the most aggressive era of financial transparency in history. The U.S. Treasury has updated the FBAR, the Foreign Bank Account Report, requirements for the 2025 tax year, which you're filing right now in early 2026. The big change this year isn't just the deadline, it's the definition of control. In the past, some dual citizens thought they could avoid reporting an account if their name wasn't the primary one on it, or if it was a business account in their second country. The 2026 guidelines make it clear, if you have signatory authority, meaning you can move the money, you have to report it, period. I've had people reach out to me in a panic because they realized they've been a shadow signer on a parent's account in Ireland or a spouse's business account in Mexico for years without reporting it. In 2026, the IRS is using AI-driven auditing tools to cross-reference data from the Common Reporting Standard, which over 100 countries now use. This means that foreign banks are automatically sending your account info to the US government. If the bank sends the data and you didn't file the report, that's when the willful violation penalties kick in. And those start at $100,000 or 50% of the account balance, whichever is greater. It's a terrifying number, but the must-know rule for 2026 is that the government is actually offering a streamlined filing procedure right now for people who genuinely didn't know the rules. If you're in that boat, this is your year to get clean before the window closes. Second, we need to address the physical presence reporting for 2026. For dual citizens who live primarily outside the US but keep their American passport for the safety net, the State Department and the IRS are now more closely tracking your days in country. This matters for the foreign earned income exclusion. With the rise of digital nomad visas and remote work, many dual nationals are passport hopping to stay under the radar. But as of this year, the EES, the entry-exit system in Europe, is sharing biometric data with U.S. border agencies. If you claim on your tax return that you were outside the U.S. for 330 days, but the digital border logs show you scanned your U.S. passport in Miami 5 times that year, the system is going to flag you automatically. Third, let's look at the actual passport renewal timelines, because this is where the alert part of the video really hits home. As of January 2026, the State Department is seeing a massive surge in applications because so many 10-year passports issued during the 2016 travel boom are expiring. Standard processing is currently sitting at 8 to 10 weeks door to door, and even expedited service can take 6 to 7 weeks. If you are a dual citizen, you have a double burden. You need to ensure both of your passports have at least 6 months of validity beyond your planned return date. I cannot tell you how many people get to the airport with a US passport that expires in 4 months, thinking, I'm a citizen, they have to let me back in, only to have the airline refuse to even let them board the flight to their destination. All of this, the travel authorizations, the bank reporting, the biometric tracking, leads to one big question. Is the second passport still an asset, or is it becoming a tracking device? In the final part of this video, we're going to talk about the nuclear option that more Americans are choosing in 2026 than ever before: renunciation. We'll look at the current exit tax, the 2026 wait times for the oath of renunciation, and whether the benefits of being a global citizen still outweigh the costs of being a US person. You won't want to miss this because the financial stakes are higher than they've ever been. This leads us to the absolute nuclear option that's being discussed more in 2026 than ever before: renouncing your US citizenship. For some dual nationals, the administrative weight of being a US person has finally reached a breaking point. But before you book that appointment at an embassy, you need to understand that the US government does not let you go easily. It's a process designed to ensure that if you're leaving the club, you pay your membership dues on the way out. This is where the 2026 exit tax rules come into play, and they are significantly more expensive this year than they were just a few years ago. First, you have to determine if you are what the IRS calls a covered expatriate. This is the label you want to avoid at all costs. In 2026, you hit this status if you meet any one of 3 tests. The first is the net worth test. If your global assets, your home, your 401k, your business, even your car, total $2 million or more on the day you renounce, you're covered. The second is the tax liability test, and for 2026, the threshold has risen to $211,000. That means if your average annual net U.S. income tax for the 5 years before you leave was higher than that, you're automatically in the covered category. The third test is the most dangerous because it has nothing to do with how much money you have. It's the compliance test. If you cannot certify, under penalty of perjury, that you've been 100% compliant with your U.S. taxes and FBARs for the last 5 years, you are a covered expatriate, regardless of your net worth. If you get slapped with that label, the IRS treats the day before you renounce as if you sold every single thing you own at its fair market value. They call this a deemed sale. Even if you don't actually sell your house in Florida or your stocks in London, you owe capital gains tax on the profit right now. The only silver lining for 2026 is that the exclusion amount has been adjusted for inflation to $9,000-$10,000. This means the first $9,000-$10,000 of your total gains are shielded from the tax. But for many dual citizens who have seen their homes or retirement accounts skyrocket in value over the last decade, that shield isn't nearly enough to cover the bill. Second, we have to talk about the retirement trap. If you have a 401k or an IRA and you renounce as a covered expatriate, the IRS doesn't just tax the gain, they often treat the entire balance as if you cashed it out in one day. You could lose 30% or more of your life savings to taxes in a single afternoon. There is a way to mitigate this by filing Form W-8CE within 30 days of renouncing, which allows you to pay a flat 30% tax only as you take distributions in the future, but you have to waive all treaty benefits to get it. This is why DIYing your renunciation in 2026 is a recipe for financial disaster. Third, even if you decide the money is worth the freedom, the logistics of leaving are harder than they've ever been. The fee to renounce is currently $2,350, but the real hurdle is the wait time. Some U.S. consulates in high-demand areas like London, Toronto, or Paris are still working through backlogs of people who decided to leave during the 2025 policy shifts. You might be looking at 6 to 12 months just to get your interview. And remember, until you have that certificate of loss of nationality in your hand, you are still a U.S. citizen in the eyes of the law, meaning you still have to file that 2026 tax return and report those bank accounts. So where does this leave you? If the Exclusive Citizenship Act of 2025 actually gains more traction this year, the pressure to pick a side is going to move from a financial headache to a legal requirement. Even though the bill is currently in committee and facing massive constitutional challenges, its very existence has changed the vibe vibe for dual nationals. The US is signaling that it wants more loyalty and more transparency, while countries in Europe and the UK are building digital walls to track exactly who is entering their borders. My best advice for 2026: don't make any permanent moves based on fear or a single headline. Instead, focus on what you can control. First, get your paperwork house in order. Ensure both your passports are valid and that your tax filings are bulletproof. If you've been forgetting to report a foreign account, use the streamlined procedures I mentioned earlier to get clean now. Second, stay informed. These rules are shifting month to month, and what was true in January might be different by June. Before we wrap up, I want to hear from you one more time. Does all this reporting and tracking make you value your second passport more as a safety net, or does it feel like a weight you're ready to drop? Let's keep the conversation going in the comments. And if you haven't yet, please hit that like button and share this video. This is exactly the kind of info that saves people tens of thousands of dollars in fines, and I want to make sure it reaches everyone who needs it. Subscribe for more deep dives into global citizenship and travel, and I'll see you in the next video.